In this video, we'll discuss about different market participants which exist in the market. Let us start with the different participants in the Indian capital market. They are the issuers, regulators, intermediaries, and investors. Issuers are those categories of people or corporates who issue fresh securities or instruments to float in the market. They can be, say, corporate or government, which issue different kinds of bonds. The next category is regulators, which regulate the entire Indian capital market and keep a check on the overall system. The next category is the intermediaries, which connect the investors and the issuers who trade in the capital markets through a recognized exchange. They are known as intermediaries, which may be the brokers or the investment bankers, etc. The last category is investor, who invest their savings in the different securities issued by the issuers. Now let us have a look at this diagram wherein the Indian capital market is subdivided as per different participants. The first being the market, then instruments, and then we have intermediaries and regulator as discussed. The Indian capital market can be divided into two categories, that is primary and secondary market. Primary market is where securities are issued for the first time. Secondary market is where shares that have already been issued are traded on the stock exchanges. Let us now have a look at the instruments. There are different categories which the issuers can issue in the markets. They can be equity, hybrid, or the debt instruments. By hybrid, we mean a mix of both equity and debt. The brokers, investment bankers, stock exchanges, and the underwriter fall under the category of intermediaries. Then we have the regulator, that is the SEBI. And then we have different players in the capital market, which can be CRA, that is credit rating agency, corporates, intermediaries, individuals, banks or financial institutions, and FDI or FII, that is foreign direct investment and foreign institutional investment. Moving to the next slide, we shall discuss more about market participants. Intermediaries, brokers. They charge a fee to handle trades between buyers and sellers of the securities. Next, clearing agencies. They are self-regulatory organizations. They are responsible for writing and enforcing the rules and disciplining the members. There are two types of clearing agencies: clearing corporations and depositories. Clearing corporations are bodies which compare member transactions, clear trades, and prepare instructions for automated settlement of those trades. They act as intermediaries in making security settlement. Next is depositories. In simple words, it means a place where things are stored. They hold security certificates for their participants, transfer positions between participants, and maintain ownership records. The two main depositories in India are NSDL and CDSL. Investment advisors are the persons or firms that are in the business of providing investment advice to investors. They issue reports or analysis regarding securities. They do this for a fee or for a commission. Exchange is an important market participant. It is a place where buyers and sellers come together to trade. In India, the two main stock exchanges are NSE and the BSE. For commodities, we have the MCX and the NCDX. One needs to be a member to trade in any of the exchanges. Let us have a look at the different regulators. First we have the SEBI, then comes the RBI, and then we have IRDA and PFRDA. SEBI regulates the stock markets in the country, RBI regulates the issue of banknotes and keeping of reserves with a view to securing monetary stability in India. The IRDA, or the Insurance Regulatory Development Authority, regulates the insurance in the country and protects the interests of the policyholders. The PFRDA regulates the pension in the country. With this, we come to the end of this unit. Until then, goodbye and good luck.